The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. My pleasure to be here, Basil Chapman. This is the Tiger Technicians Hour, and let me just check this out. 7,151.33. The last all-time high on the 17th of July was 17,151.56. 23 cents. Wow. 23 cents away from making an all-time high in the Dow in leg C in the Chapman wave, with the stochastic flat at 93%, the MACD still expanding. There's that circle that I've drawn in as a target for leg D. In the rising wedge formation, it is now testing the V-shaped pattern, which is really important because it is in leg C based on the Chapman wave methodology, and based on the methodology that I use, leg C in the E-minis, the S&P September future contract, which is in leg C in the 120-minute chart, but leg C in the daily. And the Qs, just look at this, stalling, maybe making a peak B today. That allows it to go C to catch up with the others. That's the Dow and the S&P and the New York Stock Exchange, I believe. And then we finally get later in the week leg C, maybe even leg D in the QQQ series, Power Shares QQ Trust series. And then Monday, we could make some kind of a top. This is quite incredible, and I'll explain why it's incredible. Because we're at all-time highs with a flat stochastic. Now, I haven't got it up yet. I didn't have a chance to do that because there's some other things I wanted to do. Before I forget, because I always forget to do this, tomorrow night, I will be the guest speaker. Let me just put this up here. The best speaker at the Boston Investors Business Daily Meetup Group, formerly the IBD group. It's the 11th anniversary of this particular group's meetings. I got to thank Jeff Arick for inviting me to be the guest speaker, and he has actually been the one who's been putting this together, him and Doug Roberts, for a long time. They've done yeoman's work, just a fabulous thing. I believe we should have a huge crowd tomorrow night, being the 11th anniversary, and really an important moment, although I'm going to be seeing whether or not maybe people won't come tomorrow night. They'll say, hey, why go to listen to anybody who possibly could be giving us a negative view when, in fact, every negative view that we've had for the past 5.5 years has been completely wrong, because we're at all-time highs. So here's the information. Building E51, room 315, 17 Memorial Drive, Cambridge, Mass. And this is going to be very, very, I consider it to be a pretty important meetup, because I am looking at things that are saying, on a shorter-term basis, I have all the prerequisites for a move that's coming up here that says we should get some kind of a sell-off within a week. And I don't yet have it as anything more than a sell-off in the daily chart. I've got to wait for Friday at 4 o'clock to really tell what's going on in the weekly charts, because there are some weekly charts that are more likely in leg C rather than F in their Chapman wave notation. So it's just off Memorial Drive at MIT. If you're driving along, you're on the other side of the river from Boston, the beautiful side where you're looking at that beautiful vista of the Charles River and Boston, and let's say the Gold Dome State House and the city itself. And so it's at the corner of Wadsworth Street and Amherst Street. It's the third floor. It's there's plenty of parking around there, and I'm not sure that MIT's actually started yet. So in the meantime, back at the ranch, I'm looking forward to that. 7 o'clock, it's a party, so if you want to bring a bottle of soda or something, that'll be very nice. But there's no entrance fee, anything like that. It's free. It's a great venue, and certainly great opportunity to look at all the different indices. Some, of course, we're looking at, and we'll look at right now. So that's tomorrow night over at MIT. Just go to the Boston Investors Business Daily Meetup group, and you'll be able to get the details. Now, what's going on here is really quite important, and I'll explain why. Let me just go back to the ESU, and then I'm going to run the numbers. See, the ESU, the stochastic's at 96.76%. That's 3.25% away from 100%. For this flat stochastic to fail and go down rather than remain there for between 7 to 9 continuous sessions, says that something's going to have to happen. It's going to be out of the blue. Something's going to happen over the weekend or into next week that's going to say that let me just show you. Actually, now I want to do the numbers. Let me move this down here. Now let's go. Something's going to say that the Dow, which is up 72 points to 17,149, having not yet squeaked. Yeah, no, still needs that, those 26 cents to get to a new all-time high. To say that this is not just a V-shaped recovery in the weekly chart that is going to fail within about another 50 to 100 points from here on the upside, and then come down to at least the 16,864 level in the weekly chart. 16,950 is the 9-period moving average support in the daily. And most importantly, the weekly chart, the monthly chart, with the month still got another, 5 sessions or something, 4 sessions before it ends, in leg E, and nothing negative. Well, how can I put this? The month hasn't finished. The stochastic is turning down, but at 92%. That is really strong. And the MACD, the histogram is starting to fail, but it hasn't turned negative, number one. And number two, if it turns negative, you have to have a wide beta. That's the difference between the 9-period differential, that green line, and the slow moving average, the red line. And remember, these numbers are 12, 26, and 9, 9 being the differential that's made up of the two other moving averages. And what's very important about this is that you are testing the upper dashed line of the Chapman wave inside track, going towards the higher line, which is up in the 17,800s. So I don't think it's worthwhile trying to be too clever to be early here. I had a number of calls about the VIX. I had a number of comments and things about volume I spoke about yesterday. I'm just going to repeat it again. Let me just say, I want to be absolutely clear. I do not use volume except for one specific pattern that I look at. And that's what I call a climactic volume low. And that's where the volume spirals to the upside on really bad news as the price that you're following smacks to the downside. And that bar, not the bar before, not the bar afterwards, that bar has to have huge volume. And that gives me a particular Chapman wave indicator that says there should be a rally that takes between 28, it depends on how it forms, but at least 28 bars before it comes back to retest that low. All right, so that's how I use volume. I then use unbalanced volume very specifically. So yes, I am using volume, but it's based on unbalanced volume, and it's not based on the numbers. It's based on the chart formation. And we're in leg E in the daily chart of my unbalanced volume. I use Chapman wave methodology there as well. Now, I must emphasize, as I've said before, I know people have used volume very successfully. Now, Tom has spoken about volume for as long as I've been here, for 11 and a half years. Tom's used volume. A lot of people use volume very successfully. They have their own trading methodology. All I'm saying is that if you use volume, it must be done in a specific way. You must be consistent, and it must be successful. And if it's successful, who on earth am I to even say that it doesn't work? All I can say is that if it's successful, great. I mean, that's all you want, right? I mean, that's how we develop these techniques, right? Now, I've also said that there are studies and I've quoted them right here live on TFNN whenever I've got the Stocks and Commodities magazine that mentions volume. And there are studies that say that volume works when it works and it doesn't work when it doesn't work. I say it's how you use the volume, okay? So let's get that out the way. Number two is that every summer we go through the same thing, low volume, low volume, low volume. It's just the characteristic of the summer. I say price is the arbiter of a trend, and all these other techniques, Chapman wave, Fibonacci, you could just name them, Wyckoff, whatever you want to use, are supplemental, complemental to whatever you're using. All right? So here we go. The Dow is up 76 at 17,153. Now we've made an all-time high in leg C. I don't know about the volume. Volume's not looking all that great. It doesn't matter because the price has gone higher. Okay, here's the other thing. In the weekly chart, we'll hold off until Friday and we'll talk about those charts. I will be talking about the weekly and monthlies a lot tomorrow night, and we'll go into some areas of indexes that I don't often talk about here. So 2004, up 7, almost 7 in the S&P, all-time high in leg C in the daily. Leg G/A/D. in the weekly, because I absolutely have an instant restart in the weekly chart. I have to include it in the analysis. Chart-wise, the stochastic and the MACD of the S&P are not looking that great. But remember, the S&P weekly, the weekly chart technicals are always subsidiary to the daily and the monthly. It's the sandwich, and the meat of the sandwich often is not telling you all that much in direction, because the monthly chart in this case is looking fabulous in the S&P. The daily chart is looking great, and the weekly chart technicals got lambasted when it went from 1991 down to the 1904 level back in 8th of August. So they take a while to come back. Okay, and here we go. When I look at the QQQ series, the weekly chart F/G/C, that's what I mean, and it's very nice technicals. Monthly chart, excellent technicals, and the daily chart, I've got leg B. I would love us to make a peak beat today, and they have everything in line so that sometime towards Friday or Monday or Tuesday, we can start looking at some kind of a pullback. All right? So let me just quickly do these, and we go to our callers. We've got IWM, leg D continues, unless it doesn't. Yes, a leg D right now. Not a great leg D. 4 ways to the upside. One of the smallest moves we've had from the 109.86 level to right now at 116.52. Hey, 7 points, very nice. 7%. Up 77 cents, but lagging very badly. And the weekly chart is in a retracement failure, looking like it just wants to make yet another U-shaped pattern that could fail. And I still have a leg F, a peak F, possibly in the monthly chart in the IWM. Now this is going to be very important. NYA.X. That's the New York Stock Exchange. Leg C continues. It's under the 11,105 all-time high of the 3rd of July. And it could make the V-shaped pattern that we're talking about, the Groucho Marx V-shaped pattern, right? So let me just run the other things down you with. Let's just go to, here we go. Gold is now up. It was up much more, but right now it's up 5 at 12.84. Silver's up 9 cents at 9.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Before I forget, because we want to go to our calls, I wanted to look at two things. One is I wanted to look at, because I've already forgotten because I've been through so many charts during the break. Oh, the XLF. The XLF, which is the S&P Select Financial Spider Fund, is trading at 23.42. It's up 10 cents, not much, but it's up 0.41% because it's fairly low priced. But what's really important is that it's leg B. It's moving together with the QQQs, and the MACD looks fantastic, and the stochastic looks really good at 93%. It's in a leg E, I'm calling it, in the weekly chart. Now, there are trend lines and all sorts of things that are coming right up here. I suspect that it's between the QQQ series and the QQQ series and the XLF. That's going to give us the most information about how much, when, and what if on the downside. So now what we're looking at is the monthly chart has gone above the 200-period moving average at 22.12. It's up at 23.43, and this is leg G/C in the monthly chart. I would not be surprised in the end if this is really a C and it turns out to still pull back quite sharply and then go much higher later on. So I want you to get that out. And the only other thing that's missing right now before I go to our callers, and I just need to check on something right here. 1, 2, 3, there it is. And I want you to look at, thank goodness I got a little history here. Oh, the dollar. I did look at the dollar. Dollar index is in leg D. with a little doji candle. I suspect it's going to turn out to be a silent doji candle as today's high becomes a little bit of a short-term high when the dollar pulls back under 82. It's at 82.48. This is the index itself. And the weekly chart is only in leg C. It's the only way I can count it. So with that, let's go to our first caller. We've got Dan in Tingsboro, Mass. Dan, how are you?
I'm doing very well, Basil. How are you?
I'm well, thank you.
Excellent. So I called a while back about Achillion Pharmaceuticals.
Oh,
and
what's
in fact,
the symbol?
ACHN, and you were very much correct. High-level consolidation that has broken very favorably.
Okay, good. So now, are you still in it?
Oh, yes.
Oh, beautiful. So, and the question is what to do next?
Well, that was going to be question number 2. I mostly just wanted to give you some praise for your call because you were exactly right. Today I was actually calling about Netflix.
Oh, okay, all right. Well, let's move on to that. So far, 11.11 on that ACHN, which is Achillion Pharmaceuticals. And looks, this is leg C in the monthly, and it's in leg, A, B, C in the weekly. Still looks very strong. I wouldn't be surprised if it's in for another little bit of a consolidation. 978 would be the really important support. Would be 978 and 928. Chances are it's going to try for 11. It's at 11.11. I think it'll go to 11.28 to 11.32 and then maybe take a little bit of a breather. Now let's go to, you didn't ask me, but I wanted to do that because if I look at a chart, I have no choice but to analyze it.
Well, I appreciate it.
I know that I get these emails all the time from people saying, oh man, you introduced us to this notation on the chart. I can't look at a chart without notation.
Well, I love the fact that you said C in both weekly and monthly because I've been looking at this, studying the chart quite a bit, and I see 13 in the midterm, say 6-month range, and I think 20 is a possibility longer term based upon prior highs.
What did they do?
They're in the hepatitis C area right now.
Okay, I remember. Okay. So you see, there are a couple of these biotechs that are in niche areas that are not just the sexy areas, they're in the areas that are meeting the most with the most favorable results, MS being one of them, and multiple sclerosis. There are a couple of areas that are just the breakthrough. In fact, I bumped into someone just the other day, a very good friend. I only see him periodically, and it's usually he's walking in to Bread and Whole Foods, and I'm walking out of Whole Foods. And so it's like once a year, or maybe once every 2 years or something like that. But we've been friends for many years because our daughters went to school together. And his specialty, he was down in Washington at one point. He was head of the research for biotech. I can't remember exactly what his title was. He was Mr. Big over there. Anyway, he's back here in Boston. He's a physician, and he's back in the Boston area for quite a while. And his specialty is as a consultant. And I remember him saying to me about 4 years ago, could even be 5 years ago, he said, no, it was even more than that. He said, I cannot believe that there are so many biotech firms that are spending not tens of millions, not hundreds of millions, but tens and tens and tens of millions, sometimes even billions, on products, and they don't know the basics of what they're supposed to give to the I can't remember which sector it is in government that allows these things to be adjudged, to be able to. I'll be right back. We'll be back in a moment with Dan looking at Netflix.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, so we're back and we're thinking about it, and a lot of people, Dan gave advice as to what we're looking for. Yeah, it definitely is part of the Federal Drug Administration. I'm not looking for that, and it definitely applies to phase 1, phase 2, phase 3. What I'm talking about is the specific wording for the specific product that they're trying to produce, as well as the specific target area. And sometimes the wording, as he said, you just had to switch certain words around the other way. Because if you didn't do that, you were looking at the wrong thing, and you were so busy with your product that you forgot specifically what the FDA, in this case the FDA, is looking for from you. And therefore you could produce something that's incredible, but it isn't what you stated. And he said it was such a simple thing, and he could tell from the application that no matter how long the process took, these people would never get the approval. And I thought to myself, God, that's right. I mean, to get into that position is so wrong. It's like not getting a lawyer for something that is just is a technicality, and you all you need to do is get the right wording. So I always thought that was such a crazy thing that firms that would spend so much money would make such a dumb mistake. Really, it is just a plain dumb mistake. Anyway, so we're off that subject, and I just want to
just quickly, is the word you're looking for the indication? The proper indication?
I think you're I think you're right. It was a word that I'm not familiar with, and I'm talking about 7 years ago.
Okay.
But the concept just struck me as, wow, that is dumb. There's no other word I can think of because surely, you want everything to go as smoothly as possible. Technically, you don't want you to spend all that time with all your the incredible expense and time and energy on perhaps doing the right thing but not being passed. So anyway, I just wanted to get that out. Now, two other things that I want to talk about is, I just wanted, before we go on, because time is, I just wanted to do this because it's time appropriate. The 10-minute chart, remember, folks, I talk about my naked charts. If you know the Chapman Wave methodology, you can use it to help you without anything. You don't need these candlestick charts. You just need highs and lows. That's all you need. And if you look at the E-mini back from yesterday on the 25th at 11:30, where it was at 1992.50, it went up to ABCD, pulls back, starts a brand new move that started on the 26th. Oh, that's on today. At the low, 1992.25, and we've gone A, B, C, D, E, and F. And I drew this in a little while back. I showed the resistance line, just a straight line, to show you that is the Chapman Wave inside track sell zone or repellent zone. And now look at the price. As we're talking, you've got the 10-minute chart dropping sharply from the high of 2002.75 to 2001.25. So we'll see where this takes it, because it's going to get into the support area between 2000 and 2000, depends when, between 2000 and 2050. So let's get this out the way and go back to Netflix. I only did that because if you're along Netflix, there's really no rush right now, although this is leg C from yesterday, because so far you haven't gone above 485.30. That was the high of yesterday. So this is looking like a peak C. MACD's good. Stochastics weighed 95%. How many of these charts have rallied with a very strong stochastic, which is the reason why you've got no more than a one-day pullback, 2 days, maybe in this case, it took 4 days for Amazon to break above 457.65, the high of the 11th of August, and then zoom right through the previous high at 475.87. I love the cup formation. I love the fact that it's broken out above it. I love the fact that in the Chapman Wave methodology, there's a technique I talk about, which is, it is the Chapman Wave cup and ladle. It's where you smash through the left side resistance at 475.87 in this case. And that also gave you the Chapman Wave stalk leg formation that had the body, the neck, the head, and the beak, which went all the way from 475 down to 412. And now we've got a real nice rally in the daily in leg C, and usually these go to at least a D. Now comes the issue. In a Chapman Wave cup and ladle formation, when you break above, when you get your turn down from usually a peak D, but it can go to E, could even go to an F. And in this case, I suspect we might go a little higher, because the Qs themselves haven't given any sign yet of a turn down from a leg D, because they're only in leg B. My suspicion is that when it does turn down, Netflix will go right back below 475. This is the way the pattern works in the Chapman Wave cup and ladle. It goes right through to the upside, and then when it pulls back quite sharply, and chances are the big test for Netflix on a weekly chart will be when the daily, if and when the daily breaks 469 as support, because when it goes below that, suddenly it's going to make the weekly chart look as if, hey, maybe this is a leg E and then a peak E. We'll see what happens by Friday. So I'm sorry, I didn't ask you what the question was. Well, what is the question?
I have a very specific question. I'm sorry to monopolize the time if there are other callers. I'll be quick.
No problem. Go ahead.
I actually was short last night, and it opened down about 3.5, and when it hit the 475 round number, I was short through options. I closed out the puts, and actually on the last commercial break, I was calling to see about initiating another short position, and on the last commercial break, I couldn't pass it up. I got a great price, and we're down about $1.50 since then.
Okay, so two things are, we're talking two completely different time frames. The one is...
Yeah, I'm in the weekly option, I should point out.
You're on the weekly option, but you're still using that because you can trade in and out as quickly as you want.
Correct,
Okay.
and with very little premium.
So Friday it's done, and there's very little premium. So your trade. I'm going to make the suggestion. Let me go to the 120-minute chart. So that's A, B, C, D, A, B, C, and we're at D with the long-legged doji, and we've gone under it. We haven't closed under it. Okay. I think right at the moment, because I would not be surprised if intraday, this is such a fascinating market. There are very few times I can recall in the last few years that every session that's been on the upside, you've seen majority of the point move fairly early on, and then there's been a trading band with nominal new highs, but basically you've been stuck in that band. Then there's a pullback, and then there's late buying. So once the big move has been done, all you can do is do intraday trading, because the tendency is just to have a high-level consolidation and then maybe close towards the highs or have a little bit of a rally going into the final half hour. So with that in mind, I'm going to make the suggestion. You don't have to do it right now. In fact, you can just think about it. You don't even have to do it. I'm just going to make the suggestion that if I was in the second position, I would probably take some of my profits off right now. If you want to keep a little bit, that's fine. The way Netflix is looking, it's looking as if leg D will start either by late afternoon or sometime tomorrow morning. And then on the downside, if I can just grab a 10-minute chart here, I'll use the 10-minute chart I was looking at before, the naked chart. That'll give me a lot of information. Yes. What you want to see is a Netflix trading down $1.81. And for you, this is a good sign. Oh, it's part of that news last night because Netflix didn't get anything. They didn't really win anything. Okay. All right. Hey, this is just noise because Netflix in the weekly chart, let me just go back there. Netflix in the weekly chart suggests that there is a little bit more strength to come. The monthly chart is still looking good. So I'm going to go to the 10-minute chart and just draw this line in here and show you how you can use techniques very simply here. There it is. And if Netflix goes above, I'm sure you will not be there, but if it goes above 480.50, I would not be short at all. In fact, I would have, at this particular point, I would probably have switched my short position to the long side because I'm expecting a leg D. And since it's a weekly chart, that leg D should occur Wednesday or Thursday. So you might
This one's a little bit of pride, Basil. I missed the bottom on the switch, and I didn't get a fill on my order, so I didn't want to chase it up.
Oh, okay. All right. Well, I understand that. But remember, the chart doesn't know about your pride.
That's true.
And that's number one. Number two is the chart also doesn't. The only time the chart would be looking at you askance is if you call me up and say, "I had the most fantastic trade, and it's going to this and it's going to that." Then the trading gods, lowercase t, lowercase g, will be sitting there with their little hammer going smack, smack at any moment now, and you'd be proved wrong in a very short while. So all I can say to you is even on the 10-minute chart at this particular point, it's holding real well, but just keep it in mind. That's all. You don't even have to do anything. You got your stops in place or whatever. I think that unless you see by 2:35 this afternoon, a little after 2:30 this afternoon, if Netflix is under 477.83, that's the low of the day, that would say, hey, you're not only absolutely correct, but it might take until tomorrow mid-session before it can find some stability to start the move to try to get to leg D. Okay.
Thank you so much, Basil.
So congratulations on a really nice trading. And and the other thing is, when you're busy trading and you're starting to move from one position every, say, few days, and then out of the blue you're doing 3 or 4 positions in 30 minutes. Turn around and say, whoa, be careful. I'm overtrading.
Good point.
Okay. Hey,
Thank you so
thanks
much.
so much
Appreciate
for calling, and let me know how it goes.
I will do so. Thanks.
Thank you, Dan. Good and good trade. So that's Dan
Thanks,
Tingsborough. We're looking at Netflix NFLX. It's down $1.06. I think it's going to be coming back. And my personal opinion is that I would be switching to the long side. 10-minute chart looks like it wants to make a leg C, and we'll see if that happens. But it wants to tackle 481.78 on an intraday basis, and I'm not sure it's going to do it today. But that's kind of the move that says, hey, I'm going for leg D. Actually, it could even be CVIS today, going above 485.30. I think it'll be more like tomorrow or Thursday. So let me just get so that was that. Oh, then I had I had a question about Yelp. Y-E-L-P. I looked at it the other day. It must have been Friday, maybe Thursday, Friday. And I said, Yelp is looking very good. Even though it's in leg D, what I'd said is the way the MACD, stochastic, the on-balance volume are rallying in the daily chart, the way the weekly looks like it very much wants to get above 82, 81. 82, 82 would start leg C. I thought that it was acting very, very well. Well, it is acting well. My suspicion, now let me just show you this chart here, is that this is part of a cup formation, and that Yelp is going to bump into a lot of resistance somewhere around 84, around about the 84.20-ish area, maybe a little higher. I'm not sure yet. Everything about it is technically very, very good. And that's going to be the big challenge to see whether Yelp, Y-E-L-P, trading at 82.74, up 14 cents, is able to change my opinion in the monthly chart that, in fact, it is not going to make an H formation. It's going to make the V-shaped formation in the monthly chart to go all the way back into the hundreds to test the all-time high of 101.75 made in March of this year. Everything about this chart says it's acting very well, but it's going to bump into a lot of resistance in the 85s, that sort of area, and it's going to make another U-turn to the downside. And the very big test will be how does the 77 to 74 area hold on any major turn to the downside. So far, if you're long, it's looking very good. I wouldn't be doing anything. I wouldn't even be listening to me on this, because if you were long, you're the one that had the trade, and a really good trade. So congratulations. That was the one. No, a Facebook question in the den. So here's Facebook, which we are long. It's at 75.20. It's up 18 cents. This has been the most pathetic move from a peak A to a B to a C. Hasn't even gone to a D yet. This is the longest period in Facebook's daily chart that it's actually struggled with such a tiny distance from the low to the high, going from the low to a C. Look, every other one, even when it was struggling back here, when it hit 54.66 back on the 28th of April, and it went all the way to peak C, that doji candle on the 29th of May, a long time it took. But that was at least 54 to 64. 10 points. This is 71.55 to 75.58. 4 points. Come on, Facebook. I know you need a breather, and breathers go. This is fantastic. It's a high-level consolidation. But what are you going to do when the market actually turns down a little bit? We'll be stuck. So you've got to move now and at least make a leg D, and then you have the potential for a Chapman wave, parallel wave. This is an overlapping wave, which says that the moment you go to 75.59 in Facebook, that's leg D. That's a D. That would be 1E. So leg D, and then you could pull back underneath 75.58, and then after that, if you go above 76.74, that's an overlapping wave, and that should go powerfully higher before it comes back to retest the 75s. So it's a lot of ifs there. I don't like to do that. Ifs are no good. We want to see specifics, and in this case, the specific says even leg C in the 120-minute chart is struggling here. So yeah, so for Facebook, all I'm going to say is it's acting very well, based on the fact that it hasn't pulled back, but in fact it looked kind of tied from that gap, that huge gap to the 24th, where it went to 76.74 from 71.33. I'll be right back.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi everyone, we're back. I want to do just a couple of things here before we go to the next show, which is the Options Hour, fabulous show, the Options Hour. Let me just do a couple of things. In the Dan Relist says, I've spent the majority of my professional career in regulatory affairs in the pharma industry. The mistake small companies make is to conduct studies they think scientifically will support the approval of the product they envision. They tend not to seek the help of regulatory affairs consultant until they think they need it, which is usually after they have wasted time and money. For a given drug indication for use there are specific criteria that have to be studied. For a new indication for use, it is wise to talk to the FDA early to design studies specific to the new drug indication being pursued that will be accepted by the FDA for drug approval. It's kind of what I was talking about before. Thank you for summing it up. Realist in the Den, I do appreciate it, and that's exactly what I was saying. And remind me, I was talking to someone yesterday. Two things became really apparent. One is that this person does financial advising, etc. Said that in 2009 he was struggling to send to clients reasons for investing based on his own criteria. He said, buy. This is the time to be buying. And they were all selling. The last couple of months, especially the last couple of weeks, he said he's been getting people, those very same people that refuse to buy are saying, why aren't we fully invested? Why aren't we fully, get more invested, get more invested? I get a little nervous when I hear. That's number one. Number two is this person also brought up something really important in terms of estate planning. And that in terms of estate planning, you've got to do everything correctly. It's like you're doing your taxes. If you misrepresent something by mistake, it's just a huge, cumbersome phenomenon to be able to rectify it, to get everything right. Or you completely, it's much more serious than that. So it's the same thing with the FDA. Let's go to Nick in Oklahoma City. Nick, how are you?
Hey, a long time no hear.
Yeah, pleased to hear from you. How are you?
Good, thank you.
Okay, you'd like to look at?
Singapore.
So is this a biotech?
Nope, this is software provider.
Okay, so all right. Well, whatever they're providing hasn't been working very well at all,
Right.
because this is a stock that's trading at $1.91, and just as recently as 2012, it was up in the 18 round number high. It opens at 14, goes to 18, and now it's plop down to 191. So, are you taking a little stab at this? You bottom fishing?
Exactly right.
Okay, I'm going to make two recommendations. One is that if you're bottom fishing, this is probably the best time technically that I could see if there's an opportunity at all for it to bounce. It better bounce from here, because if it doesn't do that, this is a company that could, in fact, it still might go broke. So be really careful. I would not put a lot of money in it. Treat it almost as an option. But at the same time, it's money that you're putting up. You don't really want to be losing that money. Two things to watch. 191 right now. The low today is 187. If this thing takes out 187 by tomorrow, I don't care if that's the day that it reverses back up. Please be careful. At 180, if it goes to 186, take it a little bit off. You can always put it back if it starts to come back up again. But that's a critical area, because if it takes out the low of today, I mean, it means that it could bounce, but it's got even less strength than if today it closed nicely at 199 to $2.10. No, 190. Let me just get this right. 195 to 197. If it does that, that's a good sign. So two things. One is small position, don't get carried away. And number two is this has to work by Friday. If this thing isn't above $2.01, that's the 9-period moving average, I would still be very careful. Even then, I would not get heavily into this, but you've got your eye on a stock that if it's going to move, you've timed it so the next couple of days are really important. Hey, thanks so much for calling, Nick. I'm going to put this on my watch list. Thank you very much. Folks, stay tuned. You've got the options out. Let's just be real careful. This is leg C and the down the S&P. We are expecting higher highs to go to leg D and the Qs to go to a leg D. So let's keep that in mind. I'll be back tomorrow. I'll be back with Tom later this afternoon. Otherwise, I'll see you tomorrow. Hope to see you tomorrow at the MIT Meetup Investment.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.